Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Great to be here with you all today. On today's show, honey, I shrunk the market. The caps are too small. We'll talk about that a little bit later on. Also, Winning Wednesday, busy show today. Great to have you all with us. Seth Sam Case, and your host, Mark Manila.
Good morning, everyone. Welcome to the show, and welcome to Winning Wednesday, one of our favorite days of the week, because we get to look at things that maybe God's hand at work, which we would have missed otherwise. I hope you'll be lifted up by this.
Yeah, same here, Mark. And I hopefully, folks, you also will lift up the phone and dial 610-363-1110. Give us a call. We'd love to hear from you. The phone lines are wide open. Again, 610-363-1110. Mark, let's start this conversation off, and Sam as well, by the way. With
hello. Thank you for inviting me to the show.
You're very welcome, Sam. And actually, you know, it's funny. Sam had a great joke earlier. The caps aren't fitting us. They're too small, right, Sam? What are we going to do about that?
Yeah, we have some big heads, right?
We do. Exactly right. Small cap stocks, guys. That's our topic for this first segment here. Let's do a little cap trend analysis. Mark, so before we get to your kind of insight on this, Sam, just give us a bit of a recap. This was a big first half of the year for the small cap Russell 2000.
It sure was. Yeah. Russell 2000 surging more than 21% this year, putting it on track for its best first half performance since 1991. This comes after years of underperformance compared to the large cap stocks. Semiconductor and semiconductor related companies saw the largest boom, chip related companies accounting for 16 of the Russell 2000's 50 best performing stocks this year. A couple of them, Air Test Systems, Ichor Holdings, and Max Linear, each of them rallying more than 400% in the first half of this year.
Wow.
So when we dip into this conversation, let's first start out with this question. What is a small cap stock? What is the qualification to be considered a small cap stock, Mark?
Well, small cap stock, that's just one of the smaller stocks that's listed on the Russell 2000. It's usually capitalization between 300 million and 2 billion. So that just brings it into, you know, you have your small, mid, large cap. This is the lower end of that. There are smaller companies that are traded on the exchanges.
Are those micros, micro cap?
Yeah, and smaller even. So, but but we're looking at companies between 300 million and 2 billion.
Yep. And Mark, why have small cap stocks kind of underperformed over the last several decades to now where they've had a great first half of the year? What's kind of been the reason for that? Well,
it's kind of a big brother issue. You know how in a family you have a big brother who gets all the attention because he's the oldest and he's doing everything, and you know he's the one that gets all the attention. The little guy doesn't get a lot of attention. You know, go away, little guy. You're making me nervous. You know, type of thing. But the mega caps actually have dominated. They just took the oxygen out of the market. Everybody was pouring their money into these mega caps as they were creating, with their hundreds of billions of dollars, creating new technologies, leading the way into the future. And then the small caps kind of got ignored and were pushed aside. So, that's the way it goes. It's not unusual for that to happen, but it happened in a way, and I think it's more of the technology thing. When you look at how technology has taken over the markets in general, it was the mega caps and the large caps, the upper end of the large caps, that dominated because they had the money to create and build and make these things happen.
They could build all the infrastructure.
Right. Mm. Yeah. So anyway, a large portion of the money in the markets just went that direction. So unlike the history of the markets, where small caps had a history of outperforming large caps over any 10-year period, we saw this period of time going back to the 90s as mega cap, ruled the world.
For sure. And then, Mark, what would you say has driven this recent turnaround, particularly in the last 6 months where we see small caps starting to boom again?
Well, I think it's AI is a big part of that, because with AI, there's a lot of peripheral companies that are needed to make it happen. I mean, even just think about it, energy. So there's companies that make generators. GE isn't the largest. They make the largest generators, but they're not the largest generator maker. So you have smaller companies that make generators. You have smaller companies that are exploring, that are startups that have gotten up to that to the small cap range, that are building all sorts of things. Also, the things that AI needs, like testing equipment or components, data center build out. These are all small cap companies. So they're being dragged by the mega caps into the AI area, and they have the most potential for growth because of that. So instead of a company having a mega cap of, $200 billion or something, you have a small cap that has gobs of headroom to keep growing and growing and growing. So I really believe that it's AI and the tech industry that's growing the small caps now, all the peripheral companies.
So Mark, is that the main advantage of small caps? They have a ton of room to grow. And I'm guessing maybe on the flip side of that, some of the risks compared to larger stocks is maybe there's some more volatility there. Is that right?
Yeah, there's a lot of high growth potential. There's more room for active research. Remember, a lot of the small caps, they're still in the research and development stage of things, with some products, some earnings. There's less analyst coverage, and that can that's not an advantage, actually, I don't think, but I think it's a disadvantage. But the disadvantage is they're highly. The disadvantage is their volatility. That is a roller coaster ride. Large caps are like, the kiddie park compared to what small caps do. So
it is kind of.
You
like
also have a higher business failure risk too.
Yeah. Mark, I think about it in terms of my children. My 1-year-old son is the one who's he's jumping. He climbed out of his crib the other day and fell on the floor and was totally fine. And I'm like, if one of my older kids did that, it'd be all hell broken loose. But he's fine. But it's a little more volatility, like you said. Those younger brothers there, definitely. So,
yeah, they also have a lot. Their sensitivity to debt is a lot stronger because they are smaller. They don't have the free cash flow or you think about some of the meta caps that have literally hundreds of billions of dollars sitting there in cash. Well, that's larger than the small cap capitalization, so they don't have the same kind of cash sitting around, so that they are more debt sensitive and usually have a higher debt to equity ratio, which concerns us oftentimes.
Yeah. Now, Mark, I do know in our ministry's history, we've generally said that older investors, income-minded investors, should generally stay away from small caps. Is that still true? Or is that maybe just something that we adopted because small caps weren't performing so well the last couple decades?
Well, yeah, as we rotated out of it, that could be part of it, Seth. And I also believe that one of the reasons is the volatility, because if you have a portfolio that is supporting your lifestyle and you need it to support your lifestyle, you don't have overabundance, like only a quarter of that is all I need to support my lifestyle, just the dividends, interest, and any capital gains I realize throughout the year is enough. If you need that, then that volatility, if your portfolio drops 30%, which it easily can in a small cap world, that could hurt you. So you have to stay away from that. You have to keep moving on from that.
Yeah, absolutely. And then how about, Mark, for maybe some of the younger investors, could this be an opportunity for us to perhaps see our strategy for the younger side, the growth and income minded, maybe shift a little bit more towards more of a small cap focus?
Yeah, with some warnings though here.
Yeah.
We're talking about small caps as if that's a general term, but there's small cap value and there's small cap growth, just like there's large cap or mega cap. If you look at the large cap, that's one of the hottest areas right now, large cap growth. But large cap value is all the way at the other end. It's one of the weakest areas. the same is true with small cap. Small cap growth is like right in the middle of all the different caps as far as its momentum and relative strength. But its value is on the other end. It's all the way down at the bottom. So you have to look at that and wonder what's going on. And you have to make sure that if you're getting into some stocks, you're getting into the right ones, not just a stock because it says small cap on it. You primarily are looking for small cap growth. If that's what, before anybody goes out and starts just buying small cap is what I'm saying. You have to look at it, evaluate it. Is this a growth stock or is it a value stock? And make sure that it has the financial issue steel. Then it's got upside potential. You're a winner at that point.
You never have to lose access to financial issues. Stations change programming, shows come and go, but your connection to financial issues doesn't have to. With the website and app, Financial Issues is available whenever and wherever you need it. You can watch the show live, listen on the go, or catch up on episodes you've missed with on-demand access to previous broadcasts. You'll also get the complete Financial Issues experience, including exclusive bonus content like Friday's Overtime segment. And it gets even better than that because the website offers even more ways to stay informed and engaged. Be part of the conversation by joining the live chat during the show, read articles and market insights, and explore educational videos to help you become a better steward of God's resources. So what are you waiting for? Download the Financial Issues app or visit financialissues.org today. Stay connected, stay informed, stay with Financial Issues anytime, anywhere.
My wife and I help lead a Crossroads Kids Club, and one of the girls, she said, Mr. Dave, you keep talking about like you didn't really believe in Jesus and you were like dead or something, and then like you believed in Jesus and then you're like alive, and I want to receive that. And so we like just prayed there in our group to receive Jesus and owning this idea of life with Jesus for the first time.
Help reach kids with the hope of the gospel. Visit reachOurSchools.com.
My baby was like this big, and I saw his heart beating on the screen. I went from, I don't want this baby, to talking to my child on the screen. That sonogram changed my life. I went from just Candace to Mom.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Great to have you folks. 610-363-1110. Hey, just wanted to remind all of our listeners, we have a weekly Bible study that yours truly actually gets the privilege of hosting normally every Friday morning at 6:30 a.m. Eastern Time, 5:30 Central. However, this week we are meeting tomorrow, Thursday, July 2nd. So if you join the Bible study and you're planning for the usual Friday, please don't show up on Friday. I will not be there, and no one else will either. Join us tomorrow,
Seth,
Thursday.
I don't like change. What are you doing?
I know, it's brutal. I hate having to do this, guys, because I'm like, I don't want to throw people's schedules off. But we have Bible study tomorrow, so make sure that you join us there. You can find the login information, access code, all on financialissues.org. Under the resources tab, click join our Bible study. And it's open for anyone, partners, non-partners. You can join us. So thank you guys for letting me make that public service announcement for the Bible study. Hey, today's show brought to you in part by our friends at Samaritan Ministries. Check them out at samaritanministries.org. We love the work that they do, providing a health sharing option for Christians who want to be free from the rat race of the government health care. Markets yesterday, guys, had a pretty nice day. Looks like Dow Jones was up slightly. The S&P was up almost 1%. NASDAQ up 1.5%. I haven't gotten a chance to take a look at the pre-markets yet, Mark, but I'm seeing all red, unfortunately.
Yeah, it looked pretty ugly this morning,
Yep.
but maybe that's just, people taking their their profits, locking them in,
the usual
listening
rotations.
to financial issues, locking in, pruning their profits, spreading out, expanding their garden of investments and making something happen. And that's exactly what the markets are doing, as we just talked about it. We're moving from a mega cap dominance to slowly seeing small cap growth moving up. It's like right in the middle of the relative strength trends of all the caps right now, small cap growth, as we were talking about it. So we're seeing the market spread out a little bit more, as maybe institutional investors are wondering how much further mega caps can go.
Yep.
We also got the report that the S&P 500 and NASDAQ, I think, saw their best first half since 2020. So really doing well. So maybe people are thinking, I'll take some gains right now.
For sure.
Yeah, and even in a conservative growth portfolio, it would be wise to have a smattering of small caps in there.
Good to know, Mark. Folks, if you have more information, if you want more information about these things we're talking about, your portfolio, your growth portfolio, that sort of thing, become a partner. You can do that at financialissues.org. Just click that Become a Partner button right on our homepage there. Hey guys, let's get to some good news here. How about Winning Wednesday? We've got a double deuce here of Winning Wednesday, Sam. Am I correct with that? That's pretty exciting stuff.
I do, yes. Well, I'm not going to be here next week. I'm on vacation, so I have to make up for it right here with a double Winning Wednesday. And these are really cool. So both of them, I tried to find something connected to the America 250 celebration this weekend. And there's a lot of cool stuff out there. One of them is at the Museum of the Bible in Washington, D.C., opening a very special exhibit for the 250th anniversary, including the first Bible printed in English in America. They also have lots of family Bibles from several founding fathers and other well-known Americans, and an original letter from Thomas Jefferson focusing specifically on religious freedom. The museum says all these items were chosen specifically to tell the fullest story possible about the Bible's influence on America's founding generation. The website that was talking about all this had this wonderful quote at the bottom from John Adams. It says, "The Bible contains the most profound philosophy, the most perfect morality, and the most refined policy that was ever conceived upon earth." But that's not all the goodness we got. Meanwhile, Hillsdale, the Christian college, has teamed up with PragerU, the conservative think tank, and they've launched these freedom trucks. And the idea is these are moving museums that are going to go across the country. The government sponsored them with a grant of $14 million, and they're going to be a way to celebrate the heritage of America. And because Hillsdale is Christian, they're not shying away from the Christian background either. There's a giant banner on the ceiling that says, "In God We Trust." And right when you come in, you're greeted with this really cool AI-generated George Washington who talks you through the history of America. And one of the first things he tells you, just to get in your head, is that your rights are a gift from God. So very, very cool stuff going on for 250 this year.
Yeah, that's a very exciting to me. In fact, once I saw this report, Sam, that the Hillsdale Freedom Trucks, I immediately went on and looked up their schedule, and there's none coming to St. Louis. So I'm gonna have to travel an hour or two to go see it. But that's one of the
request. Can't you put in a request to have one come towards you?
You can, but I think there's more to it than that.
Oh, come on! They're not going to come to St. Louis for Mark Manila?
House? So I'm gonna go see it. Cindy and I are gonna take a day trip and go either Kansas City, Springfield, or one of the areas it's going to be at here in Missouri, and visit it, because that sounds so exciting. And I love it that it feels like that a lot of people are getting back to understanding that our nation is founded in Christianity, that the God of salvation, the God of grace, but actually allowed this country and created this country for specific great works, which today we get to walk in.
Pretty cool. A little side quest on this one too, guys. I love when AI is used positively. And this is a way to use it positively, right?
It happens occasionally.
Pretty cool. Yeah, seriously.
It happens occasionally. It really does.
Awesome.
And I like that too. I want to see this. I haven't been to the Museum of the Bible in D.C. yet. Now, I know I know Yvonne Celia is there now. She's in D.C. for the 4th of July celebration, which I'm a little bit jealous about that. I'd love to be there, wouldn't you?
Pretty cool.
Hey, maybe we ought to get in touch with her and ask her to do an interview. What's going on there?
She's going to run. She'll jump into the reflecting pool at the National Mall before she does that.
I know.
But really, people
unlike
should check out
Dan,
these.
she doesn't like being on camera.
No, yeah. People really should check out these Freedom trucks, though. It's amazing how much they're packing into these. Also, while you're at it, I love Hillsdale, and any time I can brag on them, go to storyofamerica.hillsdale.edu. This is their whole specific webpage for this stuff. Just so many good videos and articles about the history of the United States, but also tying in the very important Christian influence in the thinking of all the founding fathers, too. Very good education and also very inspiring to boot.
Awesome.
You know, kind of like Evaluator Services, who does their screening in facts. Hillsdale is all based in facts. It's not made up. Hopefully people will believe this America was started by men who loved God. It actually gives you the facts, the receipts, the letters, the writings of all these men who formed our country and their love for the Lord. It's awesome.
That is awesome. Praise God for that stuff, guys. Really cool.
Amen.
And, you know, I do hope, folks, that you all are gearing up and preparing to have a great celebration this coming weekend of the 250th birthday of the nation. This Friday, we actually have a very special kind of independence-themed show planned, so you're going to want to tune in for that Friday morning, particularly in those first two segments. Mark, let's get to a question here before the end of our segment. Sarah is saying, hey, guys, I know that you've told us this before, but could you just give me a quick reminder? Because of the tax benefits, should the most aggressive/growth stocks always go in a Roth or a brokerage? And then should income or dividend paying stocks go in the regular SEP? Of course, this is if you have choices. What do you think, Mark? I think the general question here is which type of investment account is the best for certain types of investments?
Seth, Sam, you all know what I always say. What is it?
Yeah. If you can do the Roth, do the Roth.
I like to say put the froth in the Roth.
That's right, Sam.
That's right. The Sam say. Yeah.
If you can swing it, always the Roth.
Yeah.
Right?
Then the traditional IRA, and then the taxable non-tax qualified account, with one exception. If you're sure, absolutely sure, the security purchase that you're going to buy here is going to be held longer than 12 months so that it qualifies for long-term capital gains, and there's no way for you to buy it in the Roth, it could actually be a good strategy to put it in your taxable account. And I'm going to give an extreme example. Let's say you bought a stock today and you held it 10 years and then you need to start taking money out of it. Well, that's going to be long-term capital gains. And depending on your tax bracket, there may be no tax whatsoever on it because it will be taxed as long-term capital gains. And if you're making less than $98,000, husband and wife in retirement, if that's all you're taking out at this point, hopefully that'll adjust for inflation as we go. But your tax, your long-term capital gains on that could be zero. So it'd be almost like it had been in a Roth. And if it's above that, it's still going to be anywhere from a half to a third less approximately than your regular income tax. So the exception here is that if you can't put it in the Roth, then go ahead and put it in your taxable account if you're going to hold it for a long term. Otherwise, put it in the traditional IRA, and hopefully you'll be able to convert it sometime in the future here.
That's great. So, Sarah, there's the general principle of the Roth is best, but Mark, you said there's some specific exceptions there if you can't do the Roth. Like, for example, if your income's too high, which I still find is ridiculous, but our government says it's that way. So what are you going to do?
Well, I think if they didn't, then everybody would only have one type of an account. It would be a Roth, and the government would never get to tax it. And I could just imagine like a camera zooming in on Congress, on either the House or the Senate, if that passed, where we could just put as much as we wanted into a Roth. We'd just be seeing a lot of congressmen sitting there having convulsions.
Well, they'd have to learn some discipline for once.
Yeah. Oh, you mean spending discipline?
Yeah,
like not bankrupting our company? Right. Look, we only have a minute and a half left here. Don't get me started on debt.
I know.
That's right.
In our country. I mean, come on. We're celebrating 250 years. We've made it this far. I got a minute and 30 here. Here's the deal. I really have hope that these next 2 years with this president and this administration, we are going to see a reduction in our debt of this country. It seems like they got everything in place to make it happen now. If the midterms go well, we'll see. I really believe, I'm really hoping, I don't predict the future, but I'm really hoping to see a reduction in the national debt, a serious impact in it in the next 2 years. It could happen. You never know, right?
I hope so, Mark.
Well,
Amen
with
to
God,
that.
all things are possible.
There you go.
There you go. Don't put our hope in men, but in God alone. And that's what we do here. If you have to leave us, we look forward to seeing you tomorrow. Remember, you can join us for the full live broadcast at FISM.org, Monday through Friday at 9 p.m. Eastern time. If you don't have to leave us, we're glad you're going to stay with us because we got a whole lot more coming right after this little break that we're going to be going into here. So for you leaving, thank you for investing with biblical integrity and have a great day. We'll see all those who have to leave because of their stations only carry the first half an hour. But for the rest of you, I'm excited for the second half of our show.
As a member of Samaritan Ministries, your monthly share is a gift that goes directly to a real person in need. While that share takes care of the financial Did you know that an unborn baby's heart beats at an average of 120 times every minute? That steady rhythm, that precious sound, that's the sound of life. Preborn partners with local pregnancy clinics across the nation to help mothers choose life, providing free ultrasounds, counseling, and the gospel of Jesus Christ. When an abortion-minded mother hears that sound, 80% of the time, they choose life. For $28, you can sponsor a life-saving ultrasound and share the hope of the gospel with a mother facing an unplanned pregnancy. Hi, I'm Mark Manella, host of Financial Issues, and today I want to encourage you to give to the amazing work of Preborn. To give, just dial pound 250 and say the keyword baby. That's pound 250 baby.
You're careful about what you bring home when shopping, especially when it comes to feeding your family. Shouldn't your investments work the same way? At Timothy Plan, we offer a wide selection of mutual funds and ETFs that can help you allocate assets without compromising your values. From technology to healthcare, energy to real estate, our funds are not only diverse but uncompromising to your values. Timothy Plan funds are filtered to avoid companies involved in abortion, pornography, human trafficking, and other harmful agendas. What you invest in should reflect what you stand for. Are your investments bearing good fruit? What's in your portfolio? Contact your financial advisor today to find out, or contact Timothy Plan directly at 1-800-TIM-PLAN to discover more. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
It is great to be here with you all today. Financialissues.org, that is the place to go. Hey, listen, we did want to make a announcement to our audience here, just so you all know. Starting on Saturday, actually, this coming Saturday on CSN, we're going to be starting a brand new show called Stewardship Today. It's a Saturday show. It's going to air 7:30 Eastern Time, a.m. Eastern Time, and 4:30 p.m. Pacific Time on CSN. We'll be moving away from our weekly slot on CSN into this Saturday show. We're very excited for this, Mark. It's going to be a great opportunity to reach a new audience and kind of delve into a little bit of a different sort of topics that we typically talk about on financial issues in Stewardship Today. So I'm looking forward to that.
And of course, it will also be available for all of our partners and listeners at financialissues.org.
That's right. That's right. So, of course, we will still be having our regular live show on all the other stations and outlets that we have it. So,
and the new ones that will be coming on very soon.
Exactly. Yeah. So, exciting stuff.
And always on financialissues.org.
That's right.
Not FISM.org, but financialissues.org. Don't get that confused.
We were looking that up in the break, Mark. Apparently, FISM.org is a trick card magic group, not like witchcraft magic, like the actual, sleight of hand stuff. So
maybe we should team up.
Oh, my God.
That's right. Financialissues.org. That is the place to go. Yeah, 610-363-1110. Folks, now's the time to queue your call up. We'd love to talk with you. Speaking of talking to our partners, Mark, we've got Ed. He's 52. He says, "Hi, Mark. Welcome. This has probably been asked before, but I've tried buying the Israeli fund on Fidelity for my brokerage and then Schwab in my IRA, and I ran into some friction. I assume, Mark, he ran into some friction with both. He said, I can't remember the exact verbiage, but it left me scratching my head. Is there something I should be aware of with the Israeli fund?" Here it is again, Mark. I thought we were through with all of it. And Ed, it's not your fault. This is something we've seen before. What do you think, Mark? What should Ed do?
Ed, I'm not sure if you're talking about the fees within the Timothy plan mutual funds, which is all mutual funds have fees, or if you're talking about the fees and the issues with the broker platforms themselves. We had at the beginning of the year, we had a lot of people calling in about this, Seth, as you remember, and we did a lot of research. You want to give a little bit of background on that?
Yeah, absolutely. Yep. So, Ed, just like Mark said, it could be those fees. Mutual funds often come with advisor fees. It could be perhaps the minimum investment requirements also, Mark. I don't know if that's the snag that he's talking about.
Yeah, like on some of the platforms, possibly. Yeah, it also could be the share type.
It could be.
Because a lot of people were getting confused with iShares, which are institutional shares, which have lower costs built into them because people are buying huge amounts of them. Some of the platforms require a minimum purchase of quite a lot of money to get into them. Others don't.
Especially those iShares, Mark.
Yeah. So there's a whole bunch of combinations in there. If you would try it again and send us a copy of whatever that they on your platform, the message that came up, we'll take a look at it and we'll see if we could give you some help and guidance with that.
That'd be great. And, Ed, in the meantime, too, I don't think it can ever hurt to just reach out to Timothy Plan and see if they can help as well. You can call them at their main line. That's 1-800-846-7526. Or you might try their investor services line. That's 1-800-662-0201. Mark, like you said, there are times where the provider, which would be Timothy, could also charge fees to have funds on their platform, too. So could be worth it to just ask them.
I also remember, Seth, it just occurred to me, there was, I don't know if it was Schwab or if it was Fidelity. One of them didn't want to sell the fund because, I don't know why, but it most likely because Timothy Plan wasn't willing to pay them to put it on their platform.
I believe it was Schwab.
Yeah. Yep.
Okay.
So that could be one. Let's see. Did he? Yeah. So he mentioned that his IRA is with Schwab. So perhaps that's that snag right there, Mark.
A little more clarity on your question would help us to give you guidance on that. Yeah. But we understand your pain. Believe me, for sure. We went through this for like 3 months with just dozens of calls and questions and whatnot. Yeah. So sorry to hear about that. Historically, the Israeli fund has been a wonderful fund. It's investing in companies overseas in Israel, which has a great market, a great business market over there.
Yeah, for sure. Speaking of that, Mark, that leads to a question, and tell me what you think about this. Would it be wise for Ed or someone in his situation to look up the Israeli fund prospectus to see if he would consider investing in any of the specific holdings in that fund? Or would it be unwise to do that?
What a great idea, Seth. Absolutely. Okay. Yeah. That's, I know that sounds strange, but oftentimes I'll look at the holdings of mutual funds and I'll go through them and I'll do my analysis on them and I'll say, oh, you know what? That would be good just to hold it for those who aren't in this fund, or if it's such a small part of the fund, to hold on its own just to give it a little more weighting in my portfolio. So yeah, absolutely. That's a great idea.
Sure. Any implications he would need to be aware of, Mark? Like I'm thinking foreign taxes or anything like that. They're Israeli companies.
Those kind of things happen. Yeah. And if you're an Israeli citizen living in America, there's other taxes you're going to have to look out for.
Yeah.
So
sure.
Yeah. But
Mark, I love the other day someone asked about those foreign taxes, and you just said, yeah, that happens.
It does. Come on, people. Right. It's what happens when God blesses you with enough to invest. We have to realize there's things that Uncle Sam's going to want his. Any country's going to want a little bit. There's just going to be all sorts. The trading platforms are going to want their piece of the pie. Everybody's going to want a piece. And when you go into investment, you don't look at it like, oh, it went from $1,000 to $2,000. I now have $2,000. No, you probably don't. You have the government. If it's in a taxable account or an IRA and you're going to pull out of it, you got to take that in. You got to realize that there's always a cost to doing business.
Good stuff, Mark. Great question, Ed. Appreciate that. Yeah, follow up with us, brother. Next one we have Mark is Brandon. He's 25. He's saying, I noticed TE8, Mark, you can say it if you want to, is on the buy list, and it piqued my interest since it looks like a high-risk, high-upside stock. On my brokerage platform, looks like several analysts are bearish on it, so I would be interested to hear your case for buying it. As a young investor, and again, he's 25, I'm considering taking a small position since I have time on my side, but I would like to know more about the company and your thoughts on them first. What do you think, Mark?
Yeah, Brandon, you're very observant. It is a higher risk stock. We decided to move into Wolf, or to give our opinion as a buy, not because it was your safe 65 and up, portfolio type of a product, but it does have incredible potential because what they did, they used to be a Bitcoin miner. And what they did is they started changing their focus from Bitcoin mining to getting more in line with becoming a power-backed AI and high-performance computing infrastructure company. That's a mouthful, huh?
Yeah, right.
But that's what they're doing. So
put
actually,
that on your business card.
The Bitcoin servers they had, which were big buildings with lots of servers in it, they're converting those for AI to be servers for AI, high-powered computing for AI. Now, this is a transition that's going to cost a lot of money, and they've already been doing it, and they've already got leases on several of their server farms, their Bitcoin server farm areas for AI. So they're moving in that direction. But meanwhile, obviously, the revenues are going down since they're not servicing the Bitcoin area of it like they used to do. The revenues have been dropping, and their earnings have been dropping, and their margins are compressing, and they're spending a lot more. And we may be a little early into this, but I think that this could be one of those great turnarounds. Now, it's not for the faint of heart. It's not for those who can't sleep well at night, knowing that it can drop like it has over the last 3-6 months and before it revs back up. I would say that we have labeled this aggressive for a reason. It's an aggressive position. And for most people, I'd say, unless you have the time frame to recover from a bad investment, I would not go into it because it could turn bad on it. As you always hearing me say, I cannot predict the future, but I think this has the potential, and it has the focus, and it has enough steel in it to make it work. So that's why we put it on the buy list.
It's awesome. And Mark, even with, Brandon being 25, I like his wisdom, even with his aggressive mindset. It doesn't need to be a big portion. Make it a small position. You've got time on your side. Doesn't have to be your whole portfolio, though.
Yeah. Exactly. It's on the buy list because its upside is tied to a real business plan, a real transition plan that makes total sense. And with AI and power-backed data centers, but it belongs in the aggressive growth. I can't say that enough. Not the conservative bucket. If you buy it small, understand why you own it, and be willing to live through the volatility.
Absolutely. Hey, Mark, maybe when we come back from this break, you can explain, because I've heard you use that terminology before, and it's fascinating to me that maybe we got in a little bit early. Maybe we can talk about that a little bit on the other side of this break here as we look at our crystal ball. I think
you're bringing it up a little bit early.
That's right. I'm getting into it a little bit early right now.
We do have a break coming up here. Yeah, I think you did. Yeah, there's Seth shining again.
4D chess.
Stay with us. We'll be right back after just a little bit here. And yeah, I'd be happy to address that. I think it's a good idea to talk about what does that mean we're getting in early. If you understand that, then maybe it'll help create a little more patience in some of the buys that hit the list.
My life before I met Jesus, I was most of the time afraid. I remember one of my teachers gave the classroom an invitation for Crossroads. When they talked to me about the love of God, I felt a sort of peace in my heart. I will commit myself to learn more about God's Word, to be able to share the gospel to others.
To help reach more kids like Louise with the life-changing hope of the gospel, visit reachOurSchools.com.
I found out I was pregnant when I was 21 years old. For me, I was scared, I was shaking. They do an ultrasound, and that's when everything changed. When I saw my baby, and when I heard her heartbeat, that was it. We've seen the hand of God ever since we stepped into the pregnancy center.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Get your call up right now, folks. The number is 610-363-1110. Love to hear from you. Okay, Mark, so we ended that last segment a little bit early with this question of what does it mean to get into a stock a little bit early?
Seth, you're an artist.
Thank you,
with the
Sam.
way you did
well,
that.
It's just I'm a master of my craft.
Oh, my goodness. Well, here's what it means. Think about this. You hear about a new technology, or you hear about a new company that may have a new technology, and maybe that product or service that is created is very unique, and they have intellectual property rights for it. So they have, they have everything in place, but they're not being very productive yet. The sales haven't happened like they wanted them to, or the world's not aware of them yet. So you get excited about the stock because it has such potential, because everybody's going to need one of these in their home or something, right? So you buy into the stock because its potential for the next 3 years, the growth potential on its earnings, the growth potential on its revenues are huge, going up 300% next year, 500% the year after, and maybe, back down to 200%. You're looking at that and you're saying this thing has such potential that I want to get into it before everybody else sees it and runs the price up. So some people would say, hey, you're getting in a little early because this hasn't been proven yet. So getting in early means getting in there before the concept has been proven. At least that's what it means to me. Another definition by somebody else might be getting in before the markets realize the potential of the stock. So either one of those is true. Now, what that possibly means is, let's take Wolf, for example. Their transition, here we are in the second quarter now, going into the third. I would have hoped they would have been further along, although there are great things like, them already leasing their data center space to AI companies, their move in that direction to be high-powered computing systems and all that, and not Bitcoin. They have started making the move, but there's a lot of transition that has to go yet with them. So when I say we're in early, I think some people are realizing what Wolf is doing and are moving into it. We're early in the sense of their execution. At this point, it hasn't been proven. They haven't proven the business model yet. Here's the deal. Unlike some other companies, like OBDC, that every day seems to come out with a different plan for doing how they run their business, and they never execute properly and nothing goes on. Wolf is executing properly so far, and they do have a solid plan. So because of that, I'm giving them the benefit of a doubt. We're calling it aggressive, and we're moving forward. We may be a little early, but that could be a real benefit in 3 years from now if they move. The possible upside is huge over the next 3 to 5 years. On the other hand, the possible downside is big as well. So getting in early has its risk, but it also has its potential rewards.
Mark, that brings to mind, there's an idea that I've heard before of, none of us, unless we're doing, I guess, insider trading, times perfectly when we get into a stock. I feel like a good expectation is you want to aim generally for getting in when it's down and then getting out when it's higher, obviously. And, we would recommend doing that over a long period of time, of course. But no one is going to get in perfectly right at the very bottom to catch all the upside. So I feel like getting in a little bit early is actually quite reasonable because you're getting in when it's near that area. And then, like you said, much better to be too early than too late. If you get in too late, you've missed the run-up, right?
Well,
Am I thinking about that right?
You missed some of the gains.
Yeah.
If we got in late on, let's project, and let's not even say Wolf, just an imaginary company is going through a transition. We get in early, and it does great. It does execute well. Everything goes right. We make a whole bunch of money because of that. Okay, we've turned God's investments into a much larger investment. We've honored him by doing that, and that's a wonderful thing. If on the other hand we get in early and it doesn't work well, the execution doesn't go. You may have as fast as we wanted to. You could have 3 quarters or 6 quarters of waiting, or even, a year or two of waiting for it to execute, and then for the market to realize what it's doing, its potential and its strength at that point. So that can cause frustration in an unproductive product for a year or two for many people, because in this day of instant gratification, if it doesn't do it tomorrow, we want out, right? That's what most of the markets, a lot of investors act like. So for the long-term investor, though, it's a good strategy because you have more potential to realize. It's not the safest strategy, but it's not a ridiculously unsafe either. If the company already has revenues, they already have earnings, they already have, their debt's under control, things are under control. As long as they maintain that going forward in the transition, you will have to wait, but the potential is so much bigger when you're there at the beginning than waiting until it's already run up and peaking and then getting in on the tails of all the institutional investors and all the other people who saw this coming.
Great stuff, Mark. Hey, folks, just a reminder, Bible study meets tomorrow, 6:30 a.m. Eastern Time. Hope you'll join us. Find the login information, access code on the Financial Issues homepage under the Resources tab. Mark, question here from Mary Jo. She's saying, I've got about $500 to invest. Is that enough? I don't have a 401k any longer, and I'm working part-time, and I'm on disability as well. Is it legal? I would only invest my job income. So, Mark, we actually talked about this question a little bit yesterday, and it seems to us like Mary Jo is asking, is she able to invest and still be on her disability payments?
Yeah. Well, yeah. I hope that, it doesn't. Because you have earned income, the IRS says that you could contribute to invest in an IRA. I don't know if you're interested in an IRA or just an investment account, a non-tax qualified account. But so you could do a non-tax qualified account, but because you have earned income, you could utilize that earned income to meet the regulations for contributing to an IRA or a Roth IRA. But the question's a little bigger than that. And here's where the vagarity of this question really comes in. And maybe you didn't even think about this, but I hope you did. And that's whether it's safe to do this investing based that you're on disability. And Seth, I think this is really the main point of this, because SSI and SSDI have different ways to calculate their benefits to you. And I forget which one, SSI, I think it might be, is based on actually your financial position. SSDI, I think, is more, or I might be getting it backwards, is more based on your disability than your ability in disability. So you have to be careful. You might be risking some of the benefits. And so you need to check with SSI and SSDI, depending on what your disability income is coming from. And make sure you don't lose some benefits if you do invest.
Absolutely. What about her first question, Mark? She's got $500 to invest. Is that going to be enough for her?
Well, I loved your answer on that, Seth. That it was very upbeat, and I love the way you say that. When we were talking about this, said absolutely.
For sure. It actually, Mark, it honestly got me excited because I appreciate that Mary Jo's asking this, because it's a time to encourage folks that if you have something, I believe that's enough to invest. Now, I would say, does she have her emergency savings fund? Does she have the moat around her castle?
There you go.
If she doesn't have that, let's get that first. But then once you got that, 500 is more than nothing. It's more than 200. Now, it might be, Mark, where it would be wise for her to target perhaps an ETF or even a fund of funds where she could be well diversified with a small amount of money like that, as opposed to just putting it all into one stock. She'd be beholden to that one stock. What do you think about that?
Yeah, I think that as an investment choice with $500 going into something like the Timothy plan, depending on your where you're at on your journey, your financial journey in life. If you're at elderly, I think I would go more into the conservative growth fund. If you're younger, you could go into the strategic growth fund, and that's a fund of funds which would give you hundreds of stocks for $500, and they're managed by professional managers, and each of the funds within there, and then the allocation of those funds in there are managed by a professional manager as well. So it makes it very simple for you.
Absolutely. And who knows, Mary Jo, God willing, your portfolio might grow, and then you might have enough money to be able to really make an impact in specific publicly traded stocks. That's what Sam did, actually. Right, Sam?
Yeah.
Pretty cool.
But the one thing you really want to be careful about, again, is you say you're on disability and we don't have depth on that. But remember, assets could affect your disability benefits. So check into that before you move forward.
Amen.
And, what else you want to check in is financialissues.org to get all the information on everything that you can do in an IRA and what the regulations are. I think we have a couple of videos out there talking about IRAs and Roth IRAs, how to use them, and who's eligible.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.